Hello and welcome to our AIM Summit webinar on Brave New World, Life After COVID, a discussion focusing on emerging financial, economic, and social trends as we gradually emerge from the pandemic. This session is sponsored by Industrie und Finanzkontor Etablissement and Gulf Analytica. And today we have with us none other than His Serene Highness Prince Michael of Liechtenstein. I'm your host, Zachary Seferati, CEO and founder at Dalma Capital and strategic partner of AIM Summit. We have over 35 countries participating in this session today. Amongst you are institutional investors, family offices, high net worth individuals, and leaders of the financial services industry. Please feel free to submit your questions as they come throughout the session. There's a Zoom Q&A dialogue at the bottom of the screen. If you're joining us on YouTube, please like the video and subscribe to our YouTube channel now. Be sure to go to aimsummit.com so you can register for the live sessions and be part of the Q&A. So happy to be introducing my long-term friend and advisor, none other than David Gibson-Moore, who is the CEO at Gulf Analytica, a financial consultancy based in Dubai, specializing in private equity, particularly in the fintech space. David has a long international career, holding senior positions in investment banking, asset management, and private equity at several major international organizations, including JP Chase. In addition to his work at Gulf Analytica, he also holds a number of senior board positions at financial institutions. David, so great to have you today, and I'll be handing over to you to introduce Prince Michael and to start off our fireside chat.
Thank you very much, Zach, for your kind introduction. Good afternoon, ladies and gentlemen. We had the great pleasure of having a discussion almost exactly this time last year as part of our AIM Summit webinars entitled Family Offices Navigating the Present Crisis. The issues at hand appeared overwhelming, and the discussion focused on how businessmen were adapting to the new circumstances, what actions they were taking, and what governments and regulatory bodies were able to do to assist. We've, of course, all been following this unprecedented journey since that time. And to use a rather overworn analogy, perhaps we're getting some inkling of some form of light at the end of the tunnel, and our thoughts can begin to turn to the new business norms and government strategies that are beginning to emerge. So this discussion is entitled Brave New World, Life After COVID. We wanted to have the opportunity to take a look at the likely future trends for financial markets and the sustainability of current government policy, particularly in an era of really bloated public sector debt. Now, I can think of no better person than Prince Michael of Liechtenstein to give us the benefits of his views and shed some light on these incredibly important issues. Prince Michael is chairman of Industrie und Finanzkontor, a leading trust company based in Vaduz, Liechtenstein, with a great tradition of expertise in long-term and intergenerational preservation of wealth. He is also founder and chairman of Geopolitical Intelligence Services. GIS provides business leaders and policymakers with geopolitical forecasts to assist their strategic decision-making. And GIS has obviously been working extensively on providing commentaries and opinions on the emerging COVID world. Prince Michael is also a board member of the Liechtenstein Institute of Professional Trustees and Fiduciaries, as well as the chairman of the European Center of the Austrian Economics Foundation. So as we look at the world today, the big picture, although recent vaccine programs have raised hopes of a real turnaround in the pandemic, renewed spikes in certain geographies and new variants of the virus pose concerns for the outlook. However, amid this continuing uncertainty, the IMF expects the world economy to grow by 6.5% this year, up from 5.5% their January forecasts. Could I ask Prince Michael to start our discussion for your comments on this overall background to our discussion?
Yeah, thank you for inviting me here, and a good morning or a good afternoon, depending to everybody attending. Coming to this rebound, well, first, I don't think it is too surprising because there was a big fall in the GDP before the crisis. So there is necessarily a rebound. What I also believe, and I don't know how much in the 6%, which actually the IMF is expecting, they calculate also into the higher part which government will have in the economy, because through also the new financial politics, through different ways, there's a much higher part of government in the economy, which will not necessarily increase productivity, but well, actually a bit artificially increase GDP. I think there are a lot of questions which are still pretty uncertain and very difficult to predict, but there will certainly be a rebound.
Thank you. So with that background, let's turn to the prospects for financial securities in the present environment. Perhaps we could firstly look at stocks. The US economy is bouncing back quickly. Vaccines are at long last being rolled out more rapidly in continental Europe. And worldwide, both governments and central banks seem to be in no rush to rein in stimulus. This is all very positive. However, at the same time, stock valuations in many markets are troublingly high. In the US, the cyclically adjusted Shiller PE ratio is at a level that's only been seen at one other point in its 140-year history, the dot-com boom. And that was, of course, followed by a spectacular bubble. Could I have your comments on this contrast?
You know, I think what we had the last years was a tremendous, already asset inflation, which I think was strongly incited by actually money having little or no price. Little interest to negative interest, lot of money pumped in the economy, but it didn't arrive with the consumer. And this is one of the reasons, together with an increase in productivity, so new technologies, that we didn't see a consumer price in inflation. But we had an asset price, an enormous asset price in inflation. And I think it will go on. I think equities will be at high prices for the time being, because there's enough money around and there are not too many alternatives. The bond market is certainly not an alternative, because in many sectors you are bound to lose money with it. Well, you have private equity. I think there is a lot happening, but there also the prices are very high, are very inflated. But I still think that the prices for equities will stay high. Now, a prognosis is extremely difficult, because we have a situation in the financial markets which we never had before, negative interest rates. And before, one was playing in the tendency, the interest rate rising and lowering, and the stock market might adjust to that. This game doesn't work anymore. And I think we will have changes also from one industry to other one. But to the short question, yes, I think for the time being, we will have high stock prices. Might be that they're going down a bit for a while and then coming up a bit. But I'm afraid at one stage, this bubble will burst.
I guess it implied a little bit in what you were saying, the mantra of diversify, 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 in the light of existing unknowns. And certainly as far as the stock market is concerned, this probably means focusing on well-established, sound companies. And in fact, we've seen this taking place already in terms of rotation from momentum to value, particularly in case of disinvestment from tech stocks. Back to Benjamin Graham. I was interested that you felt that certainly private securities might be overpriced at the moment, but this would give a further diversification to a portfolio, of course, as would real estate and certain other private security classes.
No, I would agree with this diversified. I agree to adding private equity, adding real estate. And I think but it's very difficult to assess. When you know you are going to an area where it's more and more dangerous and the bubble might burst, as purchase power is always relative. And if you see that, you have also to see which are the sectors which will lose less. Because if you are in a moment of every price is going down, if you're in this sector where they go the least down, you will come out better out of this crisis and richer. So it's actually, we have to look for two things. We have to see opportunities for increased prices, but also look for ways to make investments which might lose less, let's say, on the books or the paper.
Yes, indeed. I know that also, because we've discussed this a little bit, that one strategy would be to short term, certainly, go back to cash for a while until the situation clarifies. But of course, if inflation, that we're going to talk about a little bit later in our discussion, sets in, that longer term certainly won't be a strategy. But, you know, sell in May and go away until the situation clarifies might be a good short-term strategy.
Yes, short-term, yes. You know, there was always the word cash is king. But if you have doubts, and I think, again, what is new is enormous sums going into quantitative easing, the money and the money doesn't have a price. And it's very difficult to foresee how that will have on the medium term for an effect on the purchasing power of the cash you have.
Yes, indeed.
So it's a very difficult thing, and there's no recipe. But I agree with you, for a short period, it might sometimes make sense. But then, I'm rather a friend of staying in very solid investments where you know it's a good, where you see the future for the products or the services of it, the management, etc. Because I think this is the way to best secure your assets.
Yes, indeed. That's very, very true. I wondered if we could have a look now at perhaps the emerging markets. Emerging markets tend to do well when global trade is improving and commodity prices are resilient. Both of those are the case now. And of course, country fundamentals matter. How do you see globally the outlook for emerging markets?
Well, I think I see it. I see it a bit like you. I think it becomes better. You know that emerging markets had problems because there was a slowing down of the economy. Also, there were problems with raw materials. This is picking up again, which is good for many of them. It's also, there is no discussion that at the moment that interest rates will really rise in the developed markets, which is also quite good for the currencies of the emerging markets. Now one has also to see how they dealt with the crisis. And we see, for instance, comparing Chile did very well and Argentina has a big problem. South Africa is in problems. Turkey has a huge problem with the currency, but the internal market works. So it's very different. And I think there, politics plays a big role how the countries are managed. Not that I think that I'm a friend of state intervention, but I don't believe that the state can contribute a lot for markets going up, but it can do a lot for markets going down and for the economy going down.
Yes, indeed. And I think if you drill down within this huge category of emerging markets, we've got, in fact, a number of subcategories, haven't we? We've got the commodity block, for instance, the manufacturing block, semiconductor block. I think most of Southeast Asia, for instance, would be considered part of the manufacturing block. And the semiconductor block comprises Taiwan and South Korea. And each of these have very different economies and would need to be analyzed separately.
I agree to that, because the question starts already, is an economy mostly geared to the internal market or mostly to exports? How dependent is it on imports? So there will be a big difference, and that's why I don't like this categorizing of markets, as I don't like the categorizing of companies, because I think you will have failures. You can have a weak market, but a very good business in the market. So I would be very careful, and I think all this categorizing, which is now less than it was 10 years ago when there were the BRICS and then this and that, but it depends very much. But also you have to look, if a country is very dependent, like the semiconductors, this is very good now, but they have also an advantage because it was something which was neglected in the US and Europe for certain reasons. And I'm also a friend of sharing internationally, but it was neglected there. And now they have a very strong market position on that. And we can see that now there is, concerning semiconductors, a supply chain problem because there isn't enough supply for the recovery.
Yes, indeed. Just to endorse your point, I think Singapore, Taiwan, North Korea are sometimes called emerging markets, and Greece and Portugal are categorized as developed markets. It rather emphasizes the anomalies. And then, of course, we've got the frontier markets as a subcategory. I wonder if we could move on to the likely trends in the fixed income market. We've touched on that already. But it's intimately bound up with the likely ex-ante projection for inflation, which of course has become one of the hottest issues in today's economic debate. I thought perhaps we could again focus initially on the US markets, as they're a key influence on global markets. And just had two quotes. The Fed thinks the strongest economic growth in nearly 40 years will generate almost no lasting inflationary pressure, which we suspect is a view which will eventually be proved extremely wrong, said Andrew Hunter of the Capital Economists. And the late Rudy Dornbusch, the noted MIT economist, once said that none of the expansions in the second half of the 20th century died in bed of old age. Everyone was murdered by the Fed. Could you please tell us your very interesting views on likely interest rate trends?
Well, I think I can maybe, I don't know whether I will contribute to clarity or I will contribute to confusion. This is, it is, I think, one of the most difficult issues we are confronted with, because there are so many possibilities and so many unintended and unchecked variables. We never had the situation of negative interest so far, and we never had such a large government spending besides in war. This is something new in the piece. The debts are staggering. So basically, if interest rates would rise, and let's say, and this is necessary to get an interesting bond market again, I think there would be necessary very strong haircuts with government debts. Is it a problem? I think the banks and pension funds have unloaded already a lot of their government debt. So it would be on the books of the central banks. What happens if the central bank writes them off? Frankly, I don't know. But I think this is a really untested way, and I don't think it is as easy as the modern monetary theory see. Then we have another thing which we have to consider. This is the new central bank digital currencies, the digital money issued by central banks. So the central banks would not use the banking system anymore to get liquidity into the economy or to fund government debts. Will there be a bond market at all after that? There will certainly be some debt market. But for me, this is a very difficult way to see, and we will have a real change in the real economy. So for the bond market, unfortunately, besides creating more confusion, I don't know, and this is also why I try to avoid it.
Indeed, and I think perhaps we could say it's the fact that there are some other factors, such as the inherently deflationary pressures of a technology-led economy, and the fact that the market still continues to have millions fewer unemployed than a decade ago, and demographic changes that would limit perhaps productivity and price pressures. And also most economies have spare capacity at the moment, don't they? Negative output gaps. So perhaps on the bond selection side, I don't know if you would concur that one could focus obviously specifically on yield to maturity, and you'd be perhaps fairly safe with a low to medium term duration instrument.
Yeah, I would agree with that.
I wonder if we could move on to some of the important policy issues facing governments, where policymakers around the world are really facing very difficult decisions. We've touched on two, of course, when and whether to open up the economy, despite the presence of the virus, and how long to continue the macroeconomic stimulus, which does involve an unfavorable trade-off between short-term benefits and possibly very serious longer-term vulnerabilities. How do you view this dichotomy?
Well, if I come to the issue of stimulus, and we see the monies which are promised in Europe. In Europe, it says for the COVID recovery and the building up of the green economy. In the United States, now the Biden administration is going a step further and really wants to finance higher consumption directly starting from the consumer. And at the same time, both the Europeans and the Americans are increasing government and public spending. So this is happening. And I'm very afraid of that, because if you have an economy which is running basically on debt finance, or let's say helicopter money finance, increased consumption, this is not sustainable. And it's like with an alcoholic. Slowly you need more and more alcohol to keep going. And this is, you can't then really stop it, because if you stop it, then there's a lot of stopping in the economy. And I think also what we look now too much is looking on the consumer side and not sufficiently also on the supply side. Is there enough? Do we have more money on the consumer side, on the state side, but we have a reduced supply, then we will run into inflation, which is because the consumers have more money, they can use more, but businesses went out of business, certain things have changed. We have also political problems. Will supply, for instance, from China remain sustainable, or will be there more protectionism? We have all these questions, and I'm sorry that I'm so negative today, but I'm worried, and I hope we are coming. There are certain also good aspects to that later.
We will indeed. I think that we certainly can explore and will explore some of these issues in a moment. But I was just, with respect to the situation, it is a balance, isn't it? Because if you were looking at macroeconomic stimulus, the dilemma, of course, is that there was great criticism at the time of the great financial crisis of 2008, 2009, that many governments were far too restrictive and focusing on austerity measures. And I think the consensus is that this caused the crisis to last far longer than needed. There's an argument now, of course, that the financial stimulus is too great, but it's terribly difficult to get the balance right, particularly in the immense emergency that we had last year.
Yes, but I think there's a difference, because in the great financial crisis, it was rather a problem of liquidity and presenting the right number of liquidity. Now, it is really starting actually blowing up the public sector, blowing up the role of the state in the economy, and bringing money directly to the consumer, which is right. But I think there is a difference. And my biggest concern is, we know that that government is a bad entrepreneur. They can't do it. And government meddles now more and more into the economy, but also with supporting businesses, financing businesses, keeping up businesses, participating in business. It plays a much higher role in the economy. At the same time, they increase the whole regulatory sector. Certain regulations are certainly necessary, but now it becomes so big that actually the entrepreneurial freedom is quite limited. And this I see as one of the biggest dangers out of that this new money coming in allows government to employ more and more people in the, let's say, controlling and administrative sector, to the detriment of the real service sector and producing sector.
I wanted very much to pick up on that point with you. I think that you, as you've just said, indeed, you strongly feel that each industry, as we recover from the crisis, should consider its strategy individually. And the role of government should be simply to consolidate these strategies and resist the temptation to influence or limit or nudge the business sector.
Yes, and unfortunately, it seems that this increases. And if, for instance, in the European Union, this way, I'm very much for a green economy and for ecology, etc. But it's now, with this money which is dedicated for it, it's more or less the state directing it. And if you see, for instance, in Germany, where the chancellor has made herself the main product manager for the automobile industry, telling the companies how to build the car of the future, this is not good. And putting the 4 major car manufacturers in Germany on the same line, this gives a huge risk if this new technology is not absolutely the right one. But now it's basically a technology urged by the state or the companies, and not developed by the companies because they see the future there.
Yes, yes. I wonder if I could bring up a topic that was much discussed in the last great financial crisis of 2008-9. Joseph Schumpeter promoting the concept of creative destruction. To what extent does this come into play right now, do you think? Have the authorities fallen prey to the too big to fail fallacy. This was a great source of criticism in the great financial crisis.
I agree to that, but I think at the moment what we have seen in COVID, and we could say there's the benefit of that it came very short term. It had to be done, but there went a lot into zombie companies who are continue living, and I'm afraid this will continue to be under the motto we have to protect jobs, etc., which is for me okay, but we need sometimes a creative distraction. But I think the way I would assess, let's say, the programs of the European Union, this is going to be just restriction and not necessarily creative.
Yes. I think it has been stated that all politics ultimately reduces to economics. I know you felt the pandemic has given rise to certain very negative consequences. And in a very recent GIS report, this was entitled "The Demise of Liberal Democracy." This you've commented on already in the discussion and raises some very important issues and challenges. Do you think you could elaborate for us your thinking in this report that was extremely interesting, and I think will be a great contribution to our debate this afternoon?
You know what, I was concerned in that, and if we look back in history, let's take the Roman Empire or the Spanish Empire, etc. All these systems or empires, because the liberal democracy is a system, but it's and a system which was very successful, but not an empire. But all these systems destroyed themselves when they became oversized. And in the Roman Empire, while the state needed money also for defense, etc., but it started more and more because the political elite started to buy themselves the favor of the people, and in order to be able to do that, they needed more and more money, more and more funds, and started also debasing the currency. And then they were increasing taxes higher and higher, more tax controls, more controls on the citizens, less freedom, and then they finally collapsed. And I think this is unfortunately what I see now. We are creating in the liberal democracies artificial money out of nothing. We have partially a very populist spending policy, and we have more and more state in it. The welfare state, which I think is necessary that we have a social thing and a social market economy, but the welfare state becomes oversized, and taxes are just dominating everything. Tax collection becomes more and more brutal, and we have the OECD now propagates basically a global tax cartel with minimum taxes globally, tax systems analogous, etc. And the feeling is more and more there that actually, and that there's an erosion of private property, and it should be the government controlling and allocating the monies. And when we are coming to that, this will be the end of a liberal democracy, because then the government has to do what the street wants and not necessarily decide at the best of their judgment. This was my thinking in there, and this is one of my big worries at the moment.
I think you felt that the threat was not necessarily from populist movements, but rather from overspending and the disproportionate power given to government administrations.
Yeah, I think so. I don't think that the populist movements they are there, they are an overflow of certain pressures, but I think the real danger comes from government itself. And I think the populist movements are actually a result of unconvincing policies.
It's very interesting. And I think you pointed out that obviously fighting COVID-19 and environmental damage are very worthy causes, but there's no transparent plan to use the money and earmark it specifically for these purposes.
Exactly. It's not transparent. It's just decided to spend it, and it's being put on the people. But I think we also have quite good news, because we are in technology, whether we look on communication, on all the things, roboting, artificial intelligence, biotechnologies, etc. We are making huge progress, and these are areas where the governments have a bit of problems of regulating. They give certain, still certain freedom. Also, governments and international organizations want to regulate it and talk about that, how to regulate it, and they should also be to a certain extent regulated. But we have there also a good signs and a real progress, which might, on the other hand, not be driven by politics anymore, or controlled only by politics, but also drive politics. And I think this is actually the good news in our times.
Yes, absolutely. Professor Michael, I wonder if we could move over to the questions, and we've got quite a few, I think, interesting ones coming up here. I've got a couple, actually, I'd like to ask you also. But the first question that I think is very interesting from Colin Whittington. Thank you, Colin. Assume we get out of COVID. How do we handle the next crisis with such elevated debt levels?
Well, this is right. We came already into the crisis with high debt levels. We will come out of the crisis with even higher debt levels. And on the long term, we could only get that under control by increasing productivity. And increasing productivity would actually mean reducing the role of state, reducing the number of people working in the controlling and administrative sector to the more productive service and production sector. This would be the only, let's say, natural way. Other ways are simply going to an even worse crisis with debt write-offs, with then huge following problems in our pension and retirement systems, in the healthcare systems, where we have a big problem anyway. So I think it's either we can really start, and this is difficult, we can really start reducing the, let's say, economic overheads created by the state and overregulation, or we will get deeper and deeper into the crisis.
Yes. One of the, again, unknown unknowns, really, I guess. And but another interesting question, focusing on the crowding out of the private sector by the state-run economies. And how does this compare in the US versus the EU, in your opinion?
You know, in the EU, I think there is still a big difference between different countries. There are countries which were traditionally had a stronger state and not. But it starts to be, unfortunately, also a bit homogenized, that this competition is ending, and there's nearly everywhere, there's more and more state involvement. Whereas it's not necessarily the fault of the European Union, because the government, the national government's bureaucracies, is even worse than the European Union. So it's, but this increases all over Europe, unfortunately. In the United States, I think this tendency is also here for a while. And when I hear now the announcement by the Biden, but there was less. If I see the announcements now by the Biden administration, I think it might get even stronger in the United States.
Yes, absolutely. I've got a question here from Andreas in Chile. Greetings from Chile. Do you see an extreme devaluation, hyperinflation of the US dollar possible in the near future if the inflation rate isn't controlled?
You know, most speakers, if they don't know the answer, say it's a good question. It's, but I don't see yet a hyperinflation, and I don't also know. You know, the US dollar is such a difficult animal because it is used all over the world, not only for the US economy, but it's also a basic currency for the international trade, etc., which makes it pretty difficult to control, but it can be somewhat controlled because the United States has such a strong economy. I don't see a hyperinflation in the near future, but I see a certain gradual, there might be a certain gradual erosion of the purchase power of the money, which comes to the same. But I don't see at the moment a hyperinflation. But I wouldn't exclude it in the further future.
Thank you. There's a second question from the same person on a different topic, and this was one that I would certainly like your further views on. He states, I would like to hear your thoughts on the topic of cryptocurrency and blockchain, and if you think it will play a major role for the recovery of the world economy post-COVID. I would certainly like to follow that up with a little bit of a discussion, if we could, on the subject we touched on, which is gov coins, central bank cryptos, and so on. But perhaps we could look first of all at the general topic of cryptocurrency, and will it play a major role for the recovery of the world economy post-COVID?
You know, I think we should distinguish whether we talk about cryptocurrencies like Bitcoin, or we talk about the central bank digital currency, which is also based on the blockchain technology, but its money is issued by the central banks. I personally think, and I think it's cryptocurrency is extremely interesting, the private one like Bitcoin, for special investments, for maybe special supply chains, to have, let's say, something which is adapted to a situation and not necessarily government control. For instance, if there is, let's say, a total monetary disaster like in Venezuela, a cryptocurrency could save a lot. Or for a certain supply chain to get it out of the currency fluctuations. I think this is a very interesting way. And I think it's also quite interesting because it forces people to think, and it forces also central bankers to know that there is something else and they can't, and they don't have necessarily a monopoly. I think the biggest danger for the currencies like Bitcoin is, again, the governments. Governments don't like to have their money monopoly in questions. There will be, I believe, more and more demonization. They will be demonized as money laundering vehicle, etc. So that it will take quite a while till they are coming through. The other thing, and we touched it at the beginning, the central bank digital currencies, like, well, there's a digital euro which is planned, there's the digital yuan the Chinese are planning. I think this will play quite a big role, because with that the central bank can go directly to the economy or directly to state debtors. Whether that's good, I doubt it, but it's a fact which exists.
Yes, indeed. If the central banks do lose control of the money supply, this has got enormous implications, hasn't it? And this is why
Yes.
they are incredibly worried about developments. I suppose the critical point is, can the central banks or the governments make crypto trading illegal? I'm very much personally involved in this, and I cannot see how ultimately that governments can make crypto trading illegal. So they have to adjust to it. And a world without central bank control of the money supply is rather difficult to envision. What are your views on that, Prince Mark?
Well, I don't think they can simply declare it illegal, but they can make it difficult, the use of it. For instance, making difficult regulatory the exchange between
Yes.
crypto and fiat.
And fiat, yes.
And as long as the prices are more or less fixed in the fiat currency of the country, that you don't have really the possibility of certain monies, because money finally has the function to be a means of exchange. It's a means of saving, and it's a means to fix prices. And as long as it is difficult to fixing prices in crypto, I think crypto will remain limited.
Yes, indeed. Another question, again, cryptocurrency seems to be on everyone's mind these days. Do you envision any nations adopting Bitcoin positions in sovereign reserves or central bank balance sheets as a hedge against excessive monetary printing, fiat debasement, and the increased politicization of the US SWIFT system?
You know, I wouldn't exclude it. I wouldn't exclude it that, let's say, Bitcoin in a certain things, maybe it's not Bitcoin, but maybe another cryptocurrency, will have a bit of a similar role like gold, because it cannot be removed. It might become a certain reserve function, which would be also be an interesting way of doing it. It's hard to imagine, but I would say this is I would not exclude that that's happening.
Yes, indeed.
And you see that more and more central banks are now increasing their gold positions.
Yes, indeed. That's very true. I have one question that has got a slightly political overtone, if you like, from Dr. Saad Naji. Thank you, Dr. Saad. Your different views make us think differently. Do you think in third world countries, one of the results of the pandemic will be more corruption, more centralization of governance?
You know, normally, the more government you have, the more laws you have, the more unclear laws are, and the size of governments you have, or you have more corruption. And I don't know. I wouldn't just say that about emerging countries, but just a short food for thought, which I got from a French philosopher, and he said the state is now handing out money to be on political parties or people in government, handing out monies to keep, not because they think it's necessary, but to keep people happy. And then they get revolted. And his deduction was out of that he says one of the most important office each citizen has is the right to vote. So with that, you are corrupting the whole voters, the whole voting basis. So everybody is getting somewhat corrupt because he votes because he's getting something specific, which might not be the best thing long term, and takes it. I thought I haven't thought the whole thing to the end, but I thought it was a very interesting way that actually a very strong state, and a very state who hands out a lot to the people, actually is corrupting the system by itself.
Indeed. I wonder if I could just go back for a moment to the aspect of supply chains that we've touched on. I think this crisis has led many to blame globalization and its inherent interdependencies. And the current downturn really represents an attack on the orthodoxy that globalization is good, that indeed goes back to David Ricardo. It's become a political issue. How do you position this criticism of globalization?
Well, I think, like many things, globalization is neither good nor bad. This is it is a factor. It's a system which you can use or you don't use it. And it's certainly going back to Ricardo, is very good. And I'm very much in favor of free trade, as long as it is really free trade. We have, since a longer time, sort of a nudged free trade. Basically, every country was quite protectionist, and protectionist for many political reasons. And I think, in general, it would be good to have globalization, or let's not call it globalization, let's call it free trade. I think free trade is a big advantage, but under the limit that there are certain strategic views to take. That on certain strategic goods, you must not become too dependent on other regions in the world, because we don't have necessarily everything is good and benevolent, etc. And we see that now, China has been a big manufacturer for the United States. Now, for political reason, it is cut. The US became again very protectionist under the pretext of jobs. The European Union is also protectionist. Also, they say they are very much for free trade, and their protectionism pretends is consumer protection. So I think globalization and free trade continues to be good, but it was also a bit misused as a scapegoat for, let's say, for insufficient increase in productivity in their own country.
Yes. Just as another observation, I think that it's unfortunate that these issues have become very much a question of political ideology. I mean, we particularly see this in the States, where long-term solvency of the state, the impact of monetary policy on growth and inflation, and how progressive the tax system should be, is politicized. In the words of one commentator, either your team is Ayn Rand or Karl Marx, pick one and yell at the other side. We seem to, in some contexts, have lost the ability to talk rationally about some of these issues.
This is true. I think we have lost a lot of debate. Things are getting quite ideological, quite emotional. And I see it also in many discussions, and I see also with where I'm sort of the really liberal free trade economy. And there we have also people who are very fundamental, as we have on the other side, it's also a very fundamental. And the economy as politics works not on dogmas, but it works on trial and error. And therefore, I think dogmatism should not be used in the national economy. And on top of it, I don't think the national economy per se is really science. It might be a school, but it's not something exact like natural sciences. And you can't put everything in models, which actually quite a few of the economists, they like to put everything into models.
Absolutely. Well, I'm afraid our time is up, unfortunately. There were many other facets we could have explored relating to present circumstances. There's certainly no shortage of contradictory vocal opinion telling us what's going on. And it surely is correct to assume that the markets will continue to be very volatile, because with this degree of unprecedented uncertainty, as you said, Prince Michael, it's very difficult to create the dimensionality around which you can create models for valuation and projection purposes. There are just too many variables and interacting in different ways. So extreme caution in investment strategies is called for. On behalf of us all, Prince Michael, I would like to extend our most sincere thanks for giving us the benefit of your most valuable insights into this brave new world. Your views and the work you've undertaken at GIS have been of immense value to our discussion. Thank you very much indeed, Prince Michael. Thank you.
Thank you.
And thank you so much again, Prince Michael, David, for such a fascinating discussion. We are really coming out of unprecedented times. And you know, as you said, Prince Michael, some of the questions, when it's a difficult question, you have to say, well, that's a very good question, because again, really none of us do know the answers on what will come out of these unprecedented times, from a monetary perspective, from a fiscal perspective, from an economic perspective. However, we've developed some very interesting insights in this session, and I think everyone is coming out of this with at least a better understanding than they came into it. So I really appreciate having you both today. Looking forward to our next AIM Summit webinar coming up this Wednesday on the 19th of May. We're going to be talking about ETFs moving beyond active. The session is sponsored by Saxo Bank. It's going to be at 4 p.m. Gulf Standard Time, 8 a.m. Eastern Time. Remember, if you are joining us now on YouTube, please like this video, subscribe to our YouTube channel now, and go to aimsummit.com so you can participate in live sessions and ask some questions to some of the world-class speakers that we have, like Prince Michael and David Gibson-Moore. Thank you so much for joining us today.